Wednesday, August 28th, market analysis, Stan Ehrlich, and boy, do we have a day. A lot of stuff is happening all of a sudden. We have a new bearish engulfing ER sell signal in the E-mini. We had a bearish engulfing. The market's been overbought. And with that combination in a very generalized sense, it gives me a signal. Turns prices red, goes short automatically, 100% automated trading system. This is the second time in this approximate same price range, which, if we're right about these signals and the market does start to head south, would look like a possible double top formation. Now, the rally highs in the last week could have been a little bit higher for a better example of a double top, 57.14 or so, 15.19 would have been better. But this is still over a significant number of weeks, and the double top highs don't have to be exactly the same price or even super close. This is probably good enough. And we got a sell signal on that rally high also. Now, the previous buy signal that we had, August 8th, has been offset a few days ago when the first ER sell signal occurred, but that didn't work. We got bumped out, unfortunately, on the E-mini when it made a higher high and took a day trade loss or an overnight trade loss. I think the day trade was actually a small profit. I don't remember at the moment. And this is a brand new sell signal. Let's see the details. And we got other ones too. Details. Went short about 8:15 California time this morning when it got below yesterday's lows. At the moment, we have a very small loss. We have had a little bit of a profit, then it came back up on a little rally. I am not expecting this to carry very far, and I do think it's going to continue to make new lows for the day. Now, this is Wednesday, and we got a 3-day weekend coming up. Markets don't like 3-day weekends because there's a lot or a significant percentage more of time that you can't do something in the market if you wanted to do something. So they tend to even up on transactions that they don't want to hold for 3 days instead of the normal 2-day weekend on this coming Friday. This leads to maybe a bit more up or down movement, and I'm obviously expecting down. Now, our trailing stop for the scalp trade, which will be offset by the close or on the close, before or on, is there at the moment, still a loss. And our stop for our overnight ER1, which got put on the books at the exact same time and has exactly the same profit or loss at the moment. There's actually 2 red lines here. That's a stop for one of them and the other one. So we'll see what happens. Now, on the spider itself, remember, we did not have, unfortunately, the right combination, and we did get for today, and we did get short on August 22nd with a bearish engulfing in overbought conditions. It should be red. And we got out a couple days later, but we didn't. And I'll tell you why, and here's why. Now, going back to the daily data chart for a moment, we have a gap to close, so I'm looking for a minimum down at the moment of 544.80. 544.80. But there's support under that, and in this range, we stand a better chance of bouncing because by then we probably are going to be oversold, but we'll see. I'll put a little marker in this gap area after today. And that's my first decent downside objective would be 540 or a little under. But I don't think it's going to stop there. Remember, I'm looking for this to be a starting point for the move into the October lows. All the way down in September, and sometime in October, I'm trying to pick a bottom for you. So, next chart is the day trade scalp we had a few days ago on August 22, which was a green line, therefore a green profitable trade. We're still holding the ER1 overnight momentarily. It has a small loss, but a lot less than we've had in the last couple of days. And the stop is up here, so it's not stopped out yet. That was our stop on our scalp trade over here. And we're out on the close. It's a scalp. Next chart is our QQQ. We are short from the high day. We had a bearish engulfing in overbought condition within the allotted number of past days, or I should say previous days to that date. And we are short the ER3 also the next day, and this is depicting that trade. Profitable, very much so. New lows for the move down since the high day today, and probably a new low close below all previous lows so far. I hope today, meaning a little lower than we are right now. And this is coming along just great. Now, I did change my kicker, so I tightened it up this morning because of the new lows for the move, and now it's locking in a modest profit. We can see the same exact thing on my short-term 1-minute chart in this case. The end of the green line is at the current quote, and it'll be moving up and down as prices move up and down, but it's locked into place where we got short in the first place, which was a little rally on August 23, late afternoon that day. And for a small amount of time, it was a loss, but the day trade scalp got out fairly quickly because it went down so much so quickly. Great. The overnight, hey, we're still holding it. It is doing fabulous. I lowered the stop a little bit this morning so that it would begin to lock in, which it is, a profit from the short sale entry price here at around, I don't know, 479, let's just say. And we're right now 72. So good. And our stop is 75.80-ish. Next chart. NASDAQ, NQ, basically the same story. Bought the market because of a bullish engulfing ER buy signal at the bottom. By the way, we had a sell signal at the high of that rally. We had a sell signal at the high of that rally, and we had some signals earlier that did not so good. But still, this was a nice profit, a very good profit, and a whopping profit. We just got stopped out of a few days ago, our long, and so our ER3 the next day, short, and you're going to see the minute chart, now 5-minute chart for that exact trade. The scalp was a small loss, unfortunately, very small loss from here to here. Probably could have had a little bit more slack kicker, and it may have made some money or less of a loss. Whatever, not crying over spilt milk. The one overnight position is doing fabulous. The stop is now locking in a profit on the NQ. I'm liking what I'm seeing. I'm looking for a lot lower levels. Tomorrow I'll have some downside objectives or significant commentary about support levels. And I am assuming that we're going to stop rallying, maybe even about where we are. Next, YM. Outside down day, bearish engulfing, but it came so close to getting overbought 2 days ago at 74.88. And never touched 75 or higher. Therefore, we can't turn red today, which we would have been able to do if the RSI had reached 75 within the last few days, and it didn't. So close. This is, 99.999% of a sell signal, but not quite there. We're out of our long position. No, I'm sorry, we're still long. There's our stop. Considering the environment we're under with the other indexes, if you had this stop, I would consider raising it a little bit, maybe even just under the low of the day so far. And you'd make a little bit more money, but it wouldn't make a huge difference. Next, we got the YM 5-minute chart. Stop is right there. The low is right there. We have a bearish engulfing, but because it wasn't quite overbought on this day, on the daily data RSI, not this squiggly thing down here, that's much too fast moving for most people. It's a 1-minute RSI, 5-minute RSI, sorry. And I'm liking what I'm seeing. We're going south. I'm fairly confident. You can tell it in my voice. And the Russell, I really don't care too much about. We did get a buy signal down here, worked out pretty well, top of the resistance level, stopped it moving up, and we're now seeing new lows. It's going to probably go down with the other indexes if I'm right about the other indexes. Next is the short-term chart on the Russell. Jumped this morning at 5:30 when a lot of government reports do come out that are important, and huge rally up, but it didn't stay up there, and it got higher than yesterday's high. So it could have a bearish engulfing, but it's nowhere near having one. It's got to get down below the close of yesterday, around 2093. Next chart. This story and interest rate futures that I've been talking about for a week or more is starting to look a little bit more feasible to you skeptics out there. And I'm still a skeptic I see what could happen. I'm talking about what can happen. That's my predictive skills, so to speak. But I got to see what I'm saying I think is going to happen. So we're starting to dip down a little. Current quote is down just a little. I want it to close below 123.24, 123 and 24 30 seconds, the low of yesterday, as soon as possible. And then I'll be a little bit more confident. Now, the confidence is this rally high was a short term, a couple of months, maybe 3 or 4 months worth of a top. This rally was an attempt to break that high. It didn't do it so far. And now we have a line I want to point out that's above this very significant longer term top on April 5th of 23, a year and a half ago, year and a quarter ago. And that's across that high, creating a giant head and shoulder bottom past tense. We've broken out of that one. The upside objective on that one is at least, or should be at least, 140. But what happens if this happens? We dribble around going sideways and down, not too much, but down to around 118. Well, actually, down to about 119 and a half, but during the month of October, which means inside this green circle. I am expecting, I'm hoping, crossing my fingers, eyeballs, and toes, that we're going to have a bottom in this circle in October in that price range. Therefore, if you go to draw a straight line, obviously it's not going to be a straight line. That would be the slope. Now I got exactly, and that's going to be a bigger, more bullish, longer term bottom formation that I will detail in the weeks to come. The notes have exactly the same story. End of all of that. We've got crude oil between a rock and a hard spot, top of the pennant formation, that yellow bear trend line, and this bull trend line across the bottoms. And it bounced basically off the line or close to it, and it's doing it again closer to the highs and support. Boom, 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 boom. So we're going to have a breakout sooner or later. I'll just wait. Natural gas, bullish engulfing today, brand new signal, double bottom formation possible. If that's true, then we've got this high here of 2.5, let's call it, and a bottom of 205. Therefore, the depth of the formation is, I don't know, I'm losing my mind here, 40. So we got a 2.8 something. I guess that's about right. And it comes right up into the major area of support, resistance. So my upside objective is approximately a little under 3. Put it that way. Yeah, definitely. And I'll put my lines in later. If this works, today's the first day up. It's got to close higher than yesterday's close, or the signal will disappear. Assuming that happens, we've got a bullish engulfing at the close and the beginning of a move up. My initial sell stop is a tick below today's low. That's probably going to change very quickly. Let's see if this works. Next chart, heating oil, bouncing off support pretty accurately today. It did it a week ago, a little bit lower, got oversold. I think this is trying to bottom out. The rally, unfortunately, is not that big a deal, just like what did I say? Crude oil a moment ago, natural gas here a moment ago. None of these are producing anything sort of like green, any particular chart formation that I could get super bullish about. Just a little bit of a rally. Gold, a brand new sell signal today. And I am so tickled pink about this because it's right smack at this resistance line I've been talking about for a couple of weeks. And that should help silver and platinum work lower. Watch this in silver and platinum in a second. This is the beginning of a down move that could go all the way down to 23.52. And what happens if that doesn't hold? Then you've got a double top formation. Well, not quite. A big broad sideways trading range stop, and the downside objective would be in the ballpark of 2180 and under. This could be the big aim on something significant. Silver, big down day. I think the rally has stopped. I didn't even expect it to get quite as high as it has for the last week and a half, but it was not violating any rules as far as the pattern is concerned. So my downside objective of 2450 is still in place, And I'm looking for this support area to get broken and to get down to or lower than 24.50. Next, platinum, the same story. All of a sudden, the legs fall off from underneath and it's a new low for a week and a half. We're bouncing off a little support, but we're nowhere near oversold. So it's got, I think, the ability to drop down to the lowest low lately of 912 and a half and break that. And we're on our way to our minimum downside objective of 808 or lower. Next is the copper market. Well, finally, we did get bumped out of our copper and we're now flat, but it was a good, profitable trade. There's the stop crawling up underneath as it should. And the green straight line is from the beginning of the trade to the end of the trade. If they're red, they're losers. If they're green, they were profitable to some degree or another. We're flat. We don't have any indication except the resistance to stop the rally, not even overbought. So that's about it. Probably back down a little. Longer term trend down. Trend is your friend. 2 buy signals worked okay. Nothing super spectacular. Next chart. We're long from a couple of days ago in soybeans. Now, the current quote has gotten low enough to punch us out of our long position, and we only had it for 2 days. But it was a profit. And the overall long-term situation hasn't changed. This buy signal was almost the low of the move. It's still a buy signal close to the bottom, but our strategy raised our stop enough to take a profit. Now, I don't want to risk the fact that it could fail and we could see a new low for the trend. After all, it's a bear market, and this buy signal is not necessarily going to be the more important turning point. I don't trust rallies and grains in general, but they are starting to give us some indication of the possibility of some good upside follow through. Let's look at the soybean oil. It's also stopped out today with a small profit after 3 days as a result of our buy signal on August 23rd. Okay, rally so far didn't go very far. We made a little money, and I stress the word a little, but at least it was a profit. I still think there could be a slight bit more rally, and that's across the grains in general. But I don't think it's a major bottom. And I do think in a few weeks or more, we're going to see new lows. Next, meal has no signals, just bouncing off of support in oversold condition and not doing particularly well today, down 460. So, the rally could be over already. I just don't have any sell signals and any great reason to claim that it is. So we could see a little bit more strength, but I just can't put on a bull hat. Next, corn. Bouncing. The low yesterday was exactly the same low as the previous day, so no bullish engulfing, too bad. We also came super close to oversold. 25.16? That is super close, 1400s. And the previous day, 25.38. So even if it was a bullish engulfing, it wouldn't turn green because the RSI didn't get to my minimum. Okay. Can it bounce? Yeah, it could. And back up to 412. I'm still bearish. I don't trust the rally if we get one, period. Wheat, a little bit different story. Bullish engulfing yesterday, and we are up 400 or 8 cents at the moment on a regular grain size contract and have reached a minor area of resistance. I'm hoping that we can get, well, our position is still on the books, up to 580. But I don't trust it. But that's just me. This could be, I don't know, the turning point, period, for months and months to come. I just don't see it yet. Next, we got a buy signal also in cattle recently. Cattle popped up pretty good yesterday and during the day today, but because of the rally high we had and the size of the dip back down, we came very close to getting stopped out, but we're still long. 178.55 from our original entry, which is about 176.50. Okay, so far so good. Stop is protecting a modest profit. Let's see what happens. Slightly friendly in cattle, but exactly the opposite in hogs. Overbought condition, and now having a doji, I think it can come back to support. Let's see what happens if it does that at 79 and a quarter and maybe a little lower. Okay, we're back to the E-mini. Good. Let's see if it starts to dip here. Great. Okay. I think we're about to make new lows. You can have a profitable trading day, ladies and gentlemen, and profitable trading to you.